Hi, my name is Thi Yến Trân. In the subject Accounting for Business in UBSS University, today I want to make introduction about financial reporting in Australia. Australia aims to promote investor confidence and integrity in the economy, so they need to make report to the Australian Taxation Office (ATO), the Australian Securities and Investments Commission (ASIC) or the Australian Securities Exchange (ASX). When operating in Australia, all businesses are required to lodge their business activity statement (BAS) to ATO to make payments and report their tax obligations. In the financial year, they need to lodge the report via email or in person. The next important thing I want to discuss today is the definition of accounting. The first function of accounting is to provide reliable and relevant financial information for managers when they make decisions. So, accounting is considered as the language of business because it transfers all information from one party to another parties. And in this slide, I want to discuss about accounting process. This process is the process of 4 steps. The first one is identifying. This takes into consideration all transactions which affect the business. The second step is measuring, which is quantifying in monetary terms. The third step is recording. It's a process of analyze, record, classify, and summarize the transactions. And the last one is communicating. It's prepare the accounting reports, analyze, and interpreting. About conceptual framework, the objective or purpose financial reporting is to form the foundation of conceptual framework. So a conceptual framework is followed by preparers of financial statements and standard setters. The objective of financial reporting is to provide financial information about reporting entity to the resource providers. That is very useful in making decisions about providing resources or allocate resources to the entity. Yes, about financial statement, there are 4 main elements. The first is income statement. This presents the revenues, expenses, and profits or losses which are generated during the reporting period. The second element is balance sheet. This presents all the assets, liabilities, and equity of the entities as of the reporting date in a special point of time. This report format is structured so that the total of all assets need to be equal to total of all liabilities plus equity. The third statement of cash flows. This presents the cash inflows and outflows that occurred during the reporting period. This can provide as a useful comparison to the income statement, especially when the amount of profits or loss reported does not reflect the cash flows experienced by the business. And the last element is statement of retained earnings. This shows changes in equity during the reporting period. The report format varies but can include the sales or repurchase of share, dividend payments, or changes that's caused by reported profits or losses. So you can see in the slide is the accounting of equation. The total asset need to be equal to total liability plus equity. And about the double entry principle. In the double entry system, all transactions are recorded in the term of debits or credits. The double entry system of bookkeeping standardizes the accounting process and improves the accuracy of prepared financial statement, allowing for improved detection of error. In accounting, an account is a record in the general ledger that is used to sort or store transactions. For example, when they will have a cash account in which to record every transaction that increase or decrease the company cash. Debit. In accounting, a debit refers to an entry on the left side of account ledger. A debit may increase one account while decrease the another. For example, a debit increase assets account, but it will decrease liability or equity accounts. In the income statements, debits increase the balance in expense and not accounts, while credits decrease their balance. Yes, about credit. Credit refers to an entry on the right side of a ledger. It refers to an accounting entry that either decreases assets or increases liabilities and equity on a company balance sheet. For example, when suppliers give products or services to an individual but don't require payment until later, so this is a form of credit. And you need to make a note that the total amount of debit must be equal to the total amount of credit in a transaction. The chart of accounts is a financial organizational tool that provides a complete listing of every account in general ledger of a company. So it is used to organize financials and give interest parties such as investor and shareholder. For example, within the accounts of income statement, revenues and expense could be broken into operating revenues, operating expenses, non-operating expenses, and so on. The circle of accounting. The accounting circle is a collective process of identifying, analyzing, recording the accounting events of a company with a process of 8 steps. The key steps of the 8-step accounting cycle include recording journal entries, plotting to the general ledger, calculating trial balance, and making adjusting entries and creating financial statements. The accounting cycle generally comprises a year or another accounting period. Yes, for the example, you can see in this slide, I make an example of one Pty Ltd in October. All the transactions I record can affect the transaction of one. In the asset, we have cash, account receivable, supplies, office equipment. In liabilities, we have bank loan, account payable. In equity, we have share capital and retained earnings. After recording all the transactions, we have the total of assets is equal to the total amount of liability plus equity. About euro transaction of one, I already made The debt we have section of all debt account. Account type we have the issue share for cash, borrow money from bank, purchase office equipment in cash, receive cash in advance from customers, pay service expense in cash, pay rent in cash, pay insurance 1 year in cash, purchase supplier on credit, and pay employee salary in cash. And all these transactions be recorded by debit and credit. For tier account, we have cash, account receivable, supplies, revenue received in advance, account payable, share capital, rent expense, and share. And in the last slide, I make a trial balance, which is the summarizing of journal recording before. Yes, you can see the debit is equal to total amount on credit. So thank you so much for your listening about my introduction today. Thank you.